Hey guys, so today was FOMC day. If you didn't watch FOMC, quite the interesting reaction from the market. So initial 2 o'clock meeting data drop, immediate $3 drop, which I don't remember a single Fed meeting where we had a straight $3 drop. There might have been some in the old Fed meetings, but in the last, like, I'd say maybe 6+ meetings, I don't think that's happened. So that was impressive. However, what's even more impressive is the fact that we completely recovered that and closed green today. So let's talk about this meeting. This was an interesting meeting. And honestly, this was probably one of the most hawkish meetings that we have had in probably 6 or 7 meetings, probably since last summer, I would say. Um, so a lot of things to keep in note here. So the dot plot, for one, this is big in my opinion. The dot plot went from showing 5.1% at end of year to showing 5.6%. So basically what that means is, and this was not unanimously, but most members agreed to it, was that there should be 2 more rate hikes by end of year. There was a few members that even saw a potential for 3 or 4 rate hikes by end of year. That's not anywhere close to what we have been told. You know, last FOMC, basically what we were told is we would not see any rate cuts this year, which obviously they're staying to. And pretty much what we got the impression of is when Jay Powell would decide to pause, which this is a pause, whether they call it a skip or not, this is a pause. But Jay Powell pretty much signaled that if he pauses, he will not restart rate hikes. So we're hearing different information now, so it's very interesting. Going to hit a couple other big data points here. Jay Powell just reiterated process of getting to 2% inflation has a long way to go. They do expect the July meeting to be a live meeting, which basically just means that it'll be data driven. So, if inflation does not peak or if core goes back up, things like that, then they will basically at that meeting make a decision. That means that right now they have no decision for July. And then other things are Jay Powell said we shouldn't call this June pause a skip. Now, I don't understand why he would say that if he didn't have plans to continue this pause. So it's kind of a little interesting. If you read through the lines, really Jay Powell is saying if we shouldn't call this a skip, he's saying that this is the pause. Because it wouldn't be a skip if we continue to pause next meeting. So it's kind of weird the way this is all coming about. But what he's also saying is that core PCE is still too high, has a long way to go. It could be a couple of years before we get rate cuts. That's wild because remember last FOMC, they were pricing in 75 basis points of cuts by the end of year. We also have, let's see, commercial real estate will have issues. An analyst, the phrase at this meeting is a strong hint that holding steady is seen as just this meeting, implying that more rate hikes are to come soon, presumably in July and September. It's very much a signal of a summer hike. Let's see. All policymakers view some further rate hikes this year as appropriate. Level of 5.6% is pretty consistent with where they were before the banking issues. So I find that interesting is pretty much the last 2 or 3 FOMCs have, I would say, been thrown ajar because of the banking sector. Basically, right before the meeting, a bank was collapsing. So the Fed kind of had to go basically dovish in order not to basically kill the banks. And now that the banks are back to being super strong, Jay Powell came out super hawkish. So it's interesting that they basically reverted right back to where we were before the bank started collapsing back in February. And the last thing is Powell says rate cuts this year will not be appropriate. This is all written out if you want to read it. So looking at the target fund possibilities for July, as of right now, a 25 basis point hike is a 63% probability for next meeting. That's only a 3% increase, which is kind of surprising today. And then looking at end of year December, currently the highest probability is 45% of basically one more rate increase. So that's a little interesting because you have JPOP here saying we will have no cuts by end of year and also hinting at a possibility of 2 more rate hikes by end of year. However, the highest probability right now for end of year is still only one 25 basis point hike. Or I suppose you could look at it as a 50 basis points of hike and then a 25 basis points of cutting. So that's pretty interesting to see. So let's look at SPY here. Basically what we ended up doing today is we had a 438 demand that was left, and that was left from basically all the way back here in April. We came up today, we finally took that level out, closed a massive doji, and then we actually put in a new supply at 436.76. So the weird thing is, not weird, but the thing is here is we are what I would call imbalanced, which means that we either need to push higher tomorrow and then immediately turn this supply into a demand, which that's what we did back here at 430. Or we need to come down and close below this supply to then rebalance the market where we're not above a previously established supply. So basically tomorrow, one or two of those things is going to happen. We're either going to have a big push up and reestablish this as a demand, which would be very bullish for probably a push to 440 to 450 next by the end of the month, or we're going to come back down and start back testing some support. We have not even touched the 8 EMA since first day of June. So my bet is that we are going to see a pretty solid red day tomorrow. I mean, historically speaking, 4 out of the last 6 FOMC meetings, the next day is opened red, and some of them pretty bloody red. And the only real meeting that we have that is similar to this was that December meeting. If you remember, in December was when we got an update on the dot plot. We also had CPI the day before it and PPI that morning. The day after the December FOMC, we actually had like a negative 1.3% open. So I want to pull that up just to visualize that with you guys here. So that's right here. So this was CPI. So if you just kind of ignored the candle, what do you see here? Same thing, uptrend with a massive doji on the day of FOMC. That day did close red though. But what happened? Boom, we sold off after that. And then we chopped and then started taking off. So I would say the odds tomorrow of a red day are pretty high. And I've been saying this since, I think last week I was saying that I think Thursday is going to be our big red day. The other really interesting thing is today, I mean, it was barely a green day, but it was green. Today's close actually is the first time since November of 2021 that SPY has closed 5 green days in a row. There's a streak back a while ago. I think we had like 6 or 7 red days in a row, and that was the first time in a long time. But this is the first time we have closed 5 green days in a row since 2021. I would have to keep going back and looking to see when the last time we had 6 green days. But I would say the odds with a new supply being put in, a doji closed, a very, very surprising hawkish FOMC meeting, and taking out a previous demand, and 5 green days in a row, that our odds of at least a red close, whether big or small, is extremely high. I did swing some SPY put or SPYX puts because of that. Now going over to futures, we did take out a demand we have up here. Again, so I'm not talking about it just yet until probably Friday. I'll update you guys just because I would like to see some of this fill out a little better with the contract roll. So going over to QQQ real quick. So QQQ here has a really nice hanging man candle. And you can see this was a really nice, we basically had a push up, drop, push up, drop, push up, drop, boom, push up. We're overdue for the drop. Now QQQ does not have the super long green stretch. We have 1, 2, 3, 4, 5. Well, I guess we do have 5 green days on QQQ also. I'm not going to do it right now, but I'll have to look back and see the last time that the Qs had that many green days in a row. But the high probability would also be of a red day tomorrow. This hanging man candle here is also a great indication of a downside. Oftentimes, I mean, we have a baby one right here. Let's see if I can find you guys another one. Oftentimes, these hanging man candles, right here is a good example. Right here, right here. That's not really quite a hanging man. There's one right there. But oftentimes these hanging man candles do become an upside resistance. So I will be looking for downside on QQQ tomorrow. But remember, guys, I mean, on the Qs, we could come all the way down to 358.5 and bounce and still be in this red bull channel, and that would still be extremely bullish. On SPY, we could come all the way down to 430.5 and bounce and still be extremely bullish. So a pullback does not mean that we're going to straight nosedive to the 400s again, or 300s again. It just means that we're overdue for some sort of sustainable pullback. The Fear and Greed Index today also hit 81, and that is the second time it has hit that level in the last 2 years. And 81 is the highest that the FG Index has been in the last 2 years. I couldn't find any sort of data that went back farther than that, but even the peak of the 2021 end of bull run there, all-time highs, didn't have a Fear and Greed Index that high. So again, that all goes into a high probability of a red day tomorrow. Now, this is the one case I will give for a bullish day tomorrow. But again, the VIX is the VIX, and it's really hard to trust the VIX. So I mentioned that big old double top we had on the VIX yesterday, and that could possibly turn into a new supply, and it definitely did turn into one. So now we're coming right back into this 13.77 demand. So we did not quite get to the 16 supply that we were, demand that we were expecting to take out before we put a supply in, but this could be a big 1, 2, 3 move down on the VIX, which if that is, that really could propel SPY super high. However, there's one thing that I'm not quite fully understanding. I don't see how or why the VIX closed negative 5% on the news that we got. Even the initial reaction at 2 o'clock, that mega negative $3 drop, VIX was unfazed by that. I mean, if you look at it, we opened at 14.48 and our high day was 14.73. I mean, the VIX was red going into FOMC, and I don't even think it went green during FOMC at all. So that is very, very intriguing. So either, and it very well could with this type of candle right here, we could see a double bottom right off of it, or we could just immediately gap back up overnight on the VIX. Kind of like we did here. We did gap fill. So now that that gap is filled, perhaps we are going to see that bigger pop up. So I want to go back to December here, and let's just see a comparison of what the markets did and what the VIX did. So this was, let's see, December CPI. So you see we had the mega negative 10% drop on the VIX. And then look at that FOMC, same thing. Remember, FOMC in December was extremely bearish because of the dot plot. And I believe back then people were still thinking about a pause and stuff like that. And then what happened the next day? Boom, VIX pumped 8%. So it is highly probable that tomorrow the VIX is going to get a huge move up. We'll see what it brings. Interestingly enough, Bitcoin showing extreme weakness end of day here now. So I've been talking about this price target for, I think since back here in middle of early May of touching 25K. We finally hit that target. So now that we hit that target, the next major support is all the way down at 24.2K. If we bounce here, we have a major, pretty much resistant, previous support area to turn into resistance now at 25.7 to 25.8K. All right, hope you guys had a good day trading today. I will see you guys tomorrow.